This is the MTPredictor weekly update for March 18th. Well, we had an interesting week last week. As you know, we got the Fed meeting out of the way, and that preceded the quadruple witching options expiration on Friday. And as expected, I remember last couple of weeks, we were expecting a pullback. We expected the pullback to be fairly shallow and then on to new highs for last week, and for a couple of reasons. One, the statistic is about 70% of the time the market rallies into options expiration. The other thing we're looking at, well, here's the Dow on the daily chart, and you see the pattern here. We had a wave 4 pullback. We hit wave 5 into the end of the week, the minimum wave 5 target into the middle of the week there. Oh, I'm sorry, the end of the week last week. Here's your typical wave 5 target. I do think it's possible that we could get a correction from here, since we are in some wave 5 resistance here. The correction would be back, this is the decision point off the wave 4. So typically after you go 5 waves up, you get a correction back to the wave 4 DP, which would put us back around 12,600 area. But because if we go to the weekly chart, we're still seeing this strength on the our strong trend filter here, where this oscillator is into this gray band at the top here, and that's why we were expecting a couple weeks ago that pullback, and then this week, here's the weekly candle from last week, to go on to new highs. I do think, this area up here is still actually we should look at it in the S&P. Let's just look at the ES here on the weekly chart. If I scrunch this up and go back again, this is the this area here is the lows from March 2009. And if I put the Elliott waves on here, you can see the 5-wave pattern down. Well, since they did take out the DP off the wave 4 swing here, this decision point, typically what happens if they take this resistance area out, which they did obviously, the tendency is this whole 5-wave pattern down will get wiped out to the upside. So what we like to do is take a decision point off of the top of wave 1 here. This area, because this area got taken out, we should see this area. And if I extend this box here, extend it out into the future. Okay, expand this. Alright, so you see how close we are. I expect that we're going to hit that at least the minimum point of this target, which is going to come in right around 1411, 1410 area. So we closed 1398.50 on Friday in the S&P. Again, here was that little pullback on the weekly. Expand this now since we had our pullback, went on to new highs, options expiration week. We figured this is what we'd get. I still think there's probably more upside. You can see the strength on the STF here in the S&P as well. Once we get into this area, then we really gotta be cautious on the upside there, because we'll be at some major resistance. Now that resistance area again starts all the way from that 1410 area, goes up around 1450. So it's a big area, but that's where you got to start being careful as far as potential corrections, and also because of the daily chart, the pattern that we have on the daily chart in the S&P as well is we're in minimum wave 5 resistance, and you can see the typical wave 5 is probably where we're headed, but we can always get a correction back to this wave 4 DP, in the S&P, that's sitting around 1325. So if you're a long, stock, it's a good time to start protecting yourself, especially if we get up above that 1400 area in the S&P. All right, let's take a look at some of the other markets here. I just wanted to take a quick peek at Apple computer. Somebody had asked me about this the other day, and you see the pattern in Apple very similar to the overall market. It's 5 waves up here. Hasn't quite gotten into typical wave 5 resistance, so it could be more upside there. We do have a couple high volume spikes here, telling us that this may be sellers creating the volume here and not buyers. So just to be cautious, but we do have strength on the STF here. So any pullback here could be shallow and may not get all the way down in the wave 4 DP. Could get a shallow pullback and then maybe a run at typical wave 5 resistance there. But once you get into typical wave 5, again, be careful to the long side in that stock. Now let's take a look at our gold. And let's just take a look. Obviously, we've got a pullback, but let's look at the weekly chart here and see what the gold trade, the long trade on the weekly chart, hit the 100% initial risk line, which means those stops moved to the entry there. So that was stopped at break even. And same, let's look at silver. Where's my silver? There's the March, but we'll just look at that. Silver, not quite. You still have your stop at entry there, 29.75 for a risk-free trade there. Basically the same. So just be careful. Gold, you're probably stopped at break even. Silver, we'll see if it gets that pullback to 29.75. If not, obviously remain long. You see the target there at 53. Let's take a peek at oil. Oil been kind of choppy. It's recovered some ground. You can see here's the next major resistance area, just above 120. Really no clear pattern here, just a little ABC as the last pattern here. Let's look at the daily chart. Get a little better picture. Again, this was the last long in oil that hit that wave C target. We got a pullback here, and then we can see what's formed currently is we're in that wave 4 support. You got a little blue buyer's candle. We had a high volume spike here, telling us that it was buyers creating the volume in the support area. So now let me just clear this off so we can just see this aspect. Let's project wave 5 up. Where can we expect this to go from here? Again, let's use our leading indicators. We're going to go up wave 5. 3, 4, and 5. Here's our minimum wave 5 target. Just about 110 in oil. The typical wave 5 target's up around 114. So this 110, 114 area is your next major resistance level. We can take a decision point off of wave 3, and you can see right around 100, well, kind of the midpoint of that decision point's right around 112. So confluence of resistance up there, but looks like buyers were stepping in here, and so you get some fall through just about to that 110 area. We'll go wave 5 up at that point. Alright, so nice pattern there in oil. And finally, let's just take a look. We were expecting, again, last week to get upside in the in our markets, S&P and the Dow and NASDAQ and so forth. when we're expecting upside like that, during the day, if we're intraday trading, we can look for these, what we call these outside gaps to the upside. And to show you what I'm talking about. Alright, here's the S&P. This happens to be a 1-minute chart. Typically during the day we'll look at the 3-minute and 5-minute. If then we know what direction we want to go in, we'll look for trades in the direction. Doesn't matter what time frame it's on. Could be a 5-minute, 3-minute, 2-minute, or 1-minute chart. Well, here was the close of this particular day. Again, this is the week we're expecting more upside. And what happens? You can see the S&P opened on this particular day. I think this was the 13th. S&P opened with this what we call outside gap up. So basically, the S&P opened higher than the previous day's high. And in fact, this first 3 candles that opened completely above the previous day's high. So you can see here's all the trading from the previous day. You can see complete outside gap up. What we're looking for now is to see if this in fact is true buying pressure in here. If we look at our STF, you see the STF is into this gray band at the top. That's telling us that there's strength to the upside here, and that there may be more upside ahead. What we want to do is we want to wait to be sure. We want to wait the first 20 to 40 minutes of trading. What we're looking for is the market to pull back that first 30 minutes or so. We just want to make sure though that the pullback is not so far that it fills the gap from the previous day's close. So here was our open. If they sell off all the way back down to the previous day's close, then all bets are off. There is no real buying pressure in here. What we want to see is a pullback, especially if we can get a pullback to unfold in maybe an ABC pattern or into a logical support, maybe wave 2 or B, maybe wave 4, something like that, and we'll look to be a buyer. So as this S&P unfolded, okay, we began to get a pullback, which is exactly what we're looking for, and we want to find trade setups in the direction that we want to go in. Now here we found it. This came up on our scanner in real time. We got a trade setup TS3, which is basically this ABC, this A, B, and C pullback. You see in this first 30 minutes of trading or so how we've got a pullback here, but they've not pulled back all the way to the previous day's close. Right, this confirms that there's buying pressure in this market. What we want to do is then eliminate the short side and look for a long setup, which we have here. We just have to wait now for our blue buyer's candle. We've got it. We can set up our trade. What we're looking for, the tendency is that the market will go on to new highs. Right, so we just want to be a buyer in a pullback with the buying pressure. We know there's buying pressure in here. It's confirmed because our STF was confirming there was going to be more upside ahead. We got an outside gap up. They're not able to fill the gap in the first 30 minutes. It confirms that buying pressure is there. It's worth looking for a trade setup in the long direction on a pullback. Okay, our software does the analysis for us. Tells us we can go long 5 contracts if we can get to if the S&P gets to 1371.50. Our risk is in check. It's $375 with a stop at 1370. The software gives us our target. It only shows us trades that have at least a target of a risk reward of 2 to 1 or greater. This is 2.6 to 1. If it gets to 1375.50, we can take $982 out on a $375 risk. Right, so we've got our pullback. We're expecting that there's buying pressure that's going to carry the market to new highs. We've got our target, and then we just have to get into the trade and let it play out. And boom, hits our target there. We're not seeing any particular strength on the STF here, so we can go ahead and take the target and be done with the trade. But that's on those weeks you're expecting the market, or the market's been strong. You're expecting the market to rally that particular week. Maybe it's into options expiration or earnings season or into holiday or something. look for those outside gaps to the upside, be a buyer on a pullback in a logical support area, take that market to new highs. Alright, hope that's been helpful. We'll take a look at these markets again next week, and wish you all a great rest of your trading week.